Welcome to TradeTheMBI.com. This is John. This report is for the 1st of October. And while we've got an exciting month coming, a little over a month away from the election, and things have been pretty much just like the poll status quo. And I know that it seems like I mentioned that a lot, but there's a very strong statistical correlation between the street's expectation and what we would expect the market to do. I mean, generally in the election year, we expected the market to be rising. It's done that modestly. Secondarily, the market clearly has a bias towards HRC in this race, and so as long as she maintains a lead or statistical advantage from an electoral standpoint, they're not going to be looking at daily polls. They're looking at the aggregate of who's going to win the election probability-wise. And so far, that's pretty much remained static. There was a little brief point where she began to slide, and that caused a little erratic nature. And while things are still fluid and well within striking distance, she still maintains the lead in all of the major things. So from that standpoint, we would expect, if that clarifies, the market to break out to a rally. Likewise, if the opposite happens and there's any further deterioration or an increase in the number of swing states, blah, 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 then I would expect that we're going to see some very violent gyrations as some of the expectations of the market are going to be have to dealt with, and money is going to have to move accordingly. So, looking at it from this standpoint, we're still in a weak overall run. We've got the support though of the steel above the cyan here. If that fades back below, might see a little bit of retest. We've just been right around the ABMs from the short side top of the ABM all the way to the, well, we haven't even quite made it down to the green, so it's been fairly stable. No objections to it whatsoever. I mean, we've had rise and shakeout. It's got to get back to the positive side in order for there to be any breakout move. It's been pretty modest there. The NASDAQ, stronger than the ES, clearly. I mean, that's visible right there, just that it's at its highs. And then from the Dow standpoint, hasn't even reached the highs back. And so the Dow is still underperforming, but it's not going to take much to catch up. And a little bit behind on its shakeout readings as well. But almost identical from DOC readings, which is very interesting that you could have that kind of disparity in actual performance, but yet the DOC reading pretty much has it identical. Let's reduce the space here. That much view of it. Look at the chart. USO, nice little breakout. The potential that there's a little bit of squeeze in supply, or that we've got some growth potential. No, it's going to get hammered back down. Short live. We talked about gold needing to revisit down here as the opportunity, and exactly what it's doing. So there was no surprise with that move at all. And the little mini rally, which I kind of mocked and laughed at as being a little ridiculous, has retraced a little bit. Not horrible. I mean, you just had your DOC spread. You have a decent buy signal that came in. They recognized it, which doesn't change the fact that it, for all the general appearances, there's just no reason for it, other than the idea that rates aren't going to rise, which potentially, if the status quo is maintained, they won't rise. So that is really where things are at, is the unsettling nature of any concept of inflation and or the idea the Fed may have to react to improved economy. But that really isn't. The influx of labor is still maintaining itself. Euro is just caught. There was actually a wild swing in the euro, big decline there, and then boom, it was all bought back up. These are just the ebb and the flows. It's all staying pretty much within the range. That's what we would just call a trader's advantage. Algorithm took a little action lower, and then it reversed, and was able to shake some people out. He did a beautiful job at it. Can't complain about that. Very effective that way. All right, here we go from a case standpoint. It's got a little large. Hard to see our chart. And I prefer to have the shakeout above. And to do that, then you just click your format and you go to scaling. So if I can move it to number 2, can't move it to number 1 because number 1 is the chart. And of course, I put it right over the DOC, but then you just right click over the DOC. And let's go to number 4 per se. Hopefully that's not where the MBI is, which turns out it is. And move that one to 7, 8. Just like so. Yeah, normally have extremely 15, but sometimes it changes though on you, depending on how many indicators might have on your chart in general. And so that's something to bear in mind with how it functions. And here we go. A lot of work for nothing, but clearly we had a nice bounce of the buy signal. Came back from over here. You can see with the orange top below, moved above the long algo, and then proceeded to get a bit overbought. I mean, overbought all the way here in the case. It was refilled right there. Then we ended up with a new set of it, which was right here, and that just got filled back in after hours. Nothing surprising. DOC spread, strong orange, almost peaking way above, not quite there. With the 5K still a little cleaner. We had depiction right back here. I think there was another one from the previous day. Slide my chart over. Easier to slide the chart by grabbing or shape that briefly. No, it was somewhat along. Well, we talked about the orange dips below, comes under there, the 7.5 with the steel. At the same time, the shakeout histogram is above the yellow, and also we had the above long algo, and that was just a clean takeaway. So that was a nice clean one from 2143, and then we proceeded to come up. We ended up with a couple of soft signals in between, but they really didn't do a whole lot of anything from a short standpoint. And that's typically because this was, while we had the huge orange, you have that above the 15 on the shakeout with the magenta and red. And that usually a pretty decent trend run going through. You can see it right here. And then it finally started to break down. And that's usually when we start to see a little bit more flexibility in our breakout readings. And then we ended up with the DOC spread, but it wasn't strong enough with the cyan until a little bit later. Right about there is when it really started to take hold, and we went negative shakeout. That's where you see the red on the shakeout anyway that developed right there. So all in all, it captures it, making adjustments to. I've been doing a couple little algorithm backend things, trying to adjust this tiny little fraction that just still keeps giving me a little bit of grief. But we're going to get it resolved, and I'm going to just move back into adding these bicycles so you can see the change. This one should have been red from way back from the crossover as it started to break down. So a couple little things that have to get worked out. But that's where it's always good to see market conditions and I can make those adjustments. Part of the new indicator download, so you'll be able to follow along as this goes, and I'll make a couple of those other little adjustments so you'll be able to see some actual changes versus what's taking place behind the scenes. But it's getting very, very close to extremely accurate and very easy for us to even follow those DOC readings and then do in the order. I think since I have to recreate the entire website, I'll probably focus more on this little trifecta here so that it's easy to identify and kind of develop a flow chart and pretty straightforward on how to follow it. And that's why I keep going over it just so that you can see how those breakouts take place and relationship between these lines. They're not about individual. And while we can identify these cyan as shorts, it's the relationship between them that really becomes the significant factor in seeing who has the overriding strength and or weakness in the market, and sometimes just neutral. So we have to play all of those factors into it at the same time. As always, continue to look for me on the Skype chat. Middle of the week, I'm heading back to Italy. That will be on Wednesday. So there may be a little gap Wednesday, Thursday where you don't have me because I will be traveling. It's ridiculously long. Need to get supersonic flight back. I missed the Concorde. That was much easier. New York to Paris in 2 hours and 40 minutes. It's crazy to spend 13 hours on an airplane to go to Europe. Anyway, that's a little bit of complaining about air travel. As always, though, trade well. We'll talk to you later.